Welcome to Inside Bitcoins. Today we're looking at a major on-chain signal in the Ethereum market that has investors paying attention. More than 31.6 million Ethereum has recently left centralized exchanges, pushing exchange reserves down to multi-year lows. For anyone new to crypto, this type of movement can be an important indicator of market sentiment. When large amounts of crypto leave exchanges, it usually means investors are moving their assets into private wallets or long-term storage instead of keeping them on trading platforms. In simple terms, fewer coins sitting on exchanges can reduce immediate selling pressure. And historically, large exchange outflows have sometimes appeared during periods when investors are preparing to hold assets for the long term. According to on-chain data, February alone saw around 31.6 million ETH withdrawn from exchanges, marking the largest monthly outflow since November. Major platforms like Binance accounted for a significant share of those withdrawals, with more than 14 million ETH leaving the exchange during the period. So why are investors moving their Ethereum off exchanges right now? One explanation is long-term accumulation. When investors believe an asset may increase in value over time, they often move it into cold storage or personal wallets rather than leaving it on an exchange where it could be sold quickly. Another reason is self-custody. More crypto users are choosing to control their own assets rather than relying on centralized platforms. And that actually brings us to something important. Real quick, before we continue, if you're holding crypto long-term, security should always be a priority. That's why many users recommend using the best wallet app to store and manage their crypto assets. Instead of leaving funds on exchanges, wallets like this allow you to maintain control of your private keys while still being able to manage multiple assets easily. If you want to check out Best Wallet, you can find the link in the description or a pinned comment. Now let's get back to the Ethereum market. Despite the large outflows, Ethereum's price has been trading around the $2,000 level recently, which many traders see as a key psychological support zone. When supply in exchanges decreases while demand remains stable or increases, it can create what some analysts call a supply squeeze. This means there may be fewer coins readily available for sale if buying pressure increases. However, it's important to remember that exchange outflows alone don't guarantee a price rally. Markets are influenced by many factors, including macroeconomic conditions, investor sentiment, and overall crypto market trends. Large outflows like this suggest that many investors are choosing to hold their Ethereum rather than sell it in the short term. And that kind of behavior can sometimes signal growing confidence in the asset. Another area of the crypto market that investors are watching right now is early stage projects and pre-sales. One project getting attention recently is Maxi Doge, which is currently running a pre-sale. According to the project website, the token is priced at around $0.000 to $8 per token, and the pre-sale has already raised several $1 million. Maxi Doge positions itself as a meme-driven project focused on the culture of high-energy crypto traders. Like many pre-sale projects, a portion of the token supply is allocated toward marketing and ecosystem development to help build early momentum. Of course, early-stage crypto projects and meme coins carry higher risk compared to established assets like Ethereum or Bitcoin. So if you're exploring opportunities like this, always make sure to do your own research before investing. If you want to learn more about the Maxi Doge presale, you can also find the link in the description. So what should investors take away from this Ethereum exchange outflow story? First, the movement of more than 31 million ETH off exchanges signals strong accumulation behavior from parts of the market. Second, reduced exchange supply can sometimes create conditions where price movements become more dramatic if demand increases. And finally, on-chain data like this provides a useful glimpse into how investors are positioning themselves behind the scenes. Whether Ethereum moves higher or remains volatile in the short term, one thing is clear: large investors and long-term holders are paying close attention to the market right now. If you want to stay updated on the biggest crypto news and market developments, make sure to subscribe to Inside Bitcoins and turn on notifications, and let me know in the comments what you think. Do you believe these Ethereum outflows are a sign of long-term accumulation or just another short-term market shift? Thanks for watching.